and welcome to the Money Show. I'm Kavita Thaplayal, and this is the show where we translate investment chaos into your mainstream wins. That's right. Today, we are stripping away the confusing jargon to give you actionable, high-utility strategies you can implement. Whether you are looking to build a bulletproof emergency fund, wipe out toxic high-interest debt, or optimize your portfolio against inflation, you are in the right place. For seasoned investors looking to fine-tune their portfolio, to young professionals making their first investment, the questions are surprisingly similar. Where should my money go? How much risk should I take? And am I actually making the right financial choices? This is the show where you get all your answers, and you can get answers by connecting with us. That's right. This is the show where we do your life financial planning. All you have to do is just scan the QR code that's flashing on the screen, and you'll be connected to a WhatsApp number, and you can send across all of your queries over there. You can send details about your insurance, your investments, and anything related to your financial goal you need guidance for. You can send across your questions, and we will help you navigate all of your financial decisions by the help of our experts. All right, so today a very interesting discussion. What if the biggest investment opportunities aren't hiding in today's headlines? That's right, but in the mega trends quietly reshaping the next 10 to 20 years from now. Technology, demographics, urbanization, regulation, changing consumer behavior, the energy transition. I'm talking about a report of Bajaj Finserv AMC that actually takes a fascinating look at these structural shifts, and more importantly, it asks what stands to benefit as the world changes. They can reshape entire markets and create winners as well as losers along the way. So let's decode this mega trend report, and joining me is Nimesh Chandan of Bajaj Finserv AMC. Nimesh, hi, good evening and welcome to the show. So very interesting report on mega trends, and I want to start with a few basics which came into my mind when I was reading the report. So you argue that buy and hold has effectively evolved into buy and watch. So what, in your view, has fundamentally changed in the markets that makes passive long-term ownership insufficient? What's the rationale and the proof, if I can say, in terms of data behind it?
Hi, Kavita, and always nice to be on your show. Uh, Clearly, you picked up the most important question, and this is something that, say, about 10 years back, I was also of the opinion that investments in equities is buy and hold. You buy into certain businesses that you like, and then forget about it. They will create wealth for you. But what we have seen in the last 20 years or 25 years is that there are a lot of changes that come about because of technology changes, regulatory changes, as economic life and the consumer behavior keeps changing. The businesses that look attractive at a certain point of time, maybe after 5 years or 10 years, may not look that attractive. I'm not saying necessarily so, but may not look attractive because a major technology or a trend change has come. And these trends are mega trends. They actually impact economies, businesses, and companies. So all we did was we changed from buy and hold to buy and watch. That keep an eye on these mega trends and ensure that the business you are invested in continues to be attractive, continues to be on the right side of these mega trends. Now, a simple example, like you said, what are the practical examples of it? From 1996, when Nifty 50 came, in the 25 years till 2021, Nifty had 104 changes in 25 years, which means four businesses in these top 50 businesses changed almost every year. And some of those businesses which were there a few decades back in the index are non-existent today, which means you need to keep track whether these businesses continue to be relevant or some major change, which is a mega trend change, has led to them either getting merged or getting shut down or their business purpose changes. So that's what mega trends investing is about. It's tracking future profit growth and ensuring that the companies that you select are on the right side of that profit growth.
Right. So I just want to understand now. This is not a new concept, but still, we can see investors having a lot of misconceptions around it. So according to you, what is the biggest misconception investors have about mega trend investing, and how do you also distinguish a genuine mega trend from a fashionable investment narrative that happens to be attracting capital today? Not to forget, a lot of people are investing looking at social media, reels, and shorts.
So megatrends as a concept actually was probably coined in 1982 about in one of the books, which was encouraging people to look at Asia and some of the emerging markets for future investment, that these are the markets that will do well because of young population, because of rising per capita income. From year 2000 onwards, this became a very important strategy for many global investors because people, when they went through this dot-com bubble and the changes in technology that came, and a lot of businesses, they did well, then they did not. So people started watching mega trends closely after the year 2000. Now, mega trends, though it looks like just a top-down approach, it's a growth investing approach, but it's not just top-down. We are not looking at which are the industries will do well and let's blindly invest there. Mega trends actually tells you which companies have the potential to grow. But there is also a bottom-up analysis done to ensure that these companies have the capability to grow or capability to capitalize on that mega trend, and also that you need to buy them at the right valuation. When we look at mega trends, we look at least 3 to 5 years forward. A fad or a fashion doesn't last long. It has a sharp cycle of up and down. So they are more cyclicals. Mega trends actually stretch out to about 10 to 20 years. But for our investment purpose, we at least ensure that for the next 3 to 5 years, this trend is helping certain businesses. Say, for example, ICE engine to electric vehicles. Now, this is a long-term trend. We ensure that we have enough players to invest in this trend, and we are seeing good growth in them, and ensuring that the companies participating in this trend are able to capitalize on it, at least make some profits and generate good returns for the investors.
All right. So, also which megatrend is currently the most overowned or overvalued? If I want you to analyze the current scenario, which is the one that is very overvalued right now?
So we have, when we looked at mega trends, we looked at many different areas and we found out certain trends that we are bullish about. However, some trends, for example, defense, after the kind of wars we have seen in Russia, Ukraine, and in West Asia, the defense companies, the expectations are very high. The stocks ran up in the last few years to a good number. Not that this trend will stop. We will still see next 5 years growth, at least the visibility in order books is there. But if it is already valued by the investors, then it gives you less scope for growth at the top. So you will see companies doing well, but may the stock price may not do so well or may not outperform the market so much.
Talk about the mega trends that you have actually identified or picked up. So, what are we talking about over here and why?
So, two, three beautiful long-term trends that we picked up is one is technology changes through AI. Now, here in India, we may not have directly these hyperscalers, but what we look at is companies who can use AI to improve their productivity, increase their sales, service their customers better. So we are actually not looking at suppliers of AI, but appliers of AI, and which are the companies, especially in banking, financial services, NBFCs, you will find that there are many companies that are using AI to improve their lending, improve their collection, manage their risk better. Uh, Another trend that we have picked up and is still at a nascent stage is contract research and manufacturing in pharmaceuticals in India. So because of regulatory changes in US, which is through the Biosecure Act, because of rupee depreciation and improvement in cost in India, you will find that a lot of business is getting transferred from China to India in terms of contract research and manufacturing or pharmaceutical manufacturing in the country. And there is a huge runway to go in these companies because they provide value to their customers and supply low cost drugs or low cost research. So these are the two important ones. Another one, which is longer term, is consumer behavior and consumer changes that we are seeing. As discretionary income is going up, as per capita income is going up, and with the young population in India, we are seeing a sharp pickup in consumption growth and especially discretionary consumption. You see the rise of quick commerce, consumers actually looking for wellness products for their consumptions, say vitamin substitutes or mineral substitutes or so. Also, they want easy financing and easier way to consume these products. That is, they should be within their reach. So consumer discretionary is picking up and it is fueling many different businesses, right from quick commerce till real estate. A small example is the kind of growth we've seen in travel, in hotels, in luggages that people are buying. These show that consumption sector in India is poised for a longer term and a faster growth.
All right. So I really also want to understand that, how can an investor have exposure to these particular mega trends? Because when you talk about a mutual fund, it is already very well diversified by nature. But before that, what is an example of a mega trend you got wrong or abandoned? Okay. And what did you learn from it?
So we have been, when we launched this fund, which is based on megatrends investing, it's been 3 years that we have been into it. I won't say we got any megatrend wrong, but sometimes it happens that we expect a company to have certain milestones in terms of financial growth, in terms of profit growth. Sometimes they may not be there. So we may actually go wrong in a company rather than going wrong in a megatrend. And it happens that way because when you pick up a megatrend very early, the winners and losers in that basket of companies may not be very clear. So what you do is you buy a bunch of these companies who you think I have the capability to do well. It is possible out of say 10 companies that you've chosen, maybe one of the companies or two of the companies may not turn out as expected, may run into some financial trouble or may have to change their business model a little bit. So I won't say going wrong on mega trends, but going wrong on company selection is there. So whenever investors are looking at mega trends investing, they need to actually not only study the mega trends, but also study how the company is growing, whether it is able to beat estimates or meet estimates, whether they have the right financials to fuel growth. Sometimes the companies have to do extra capex to capitalize on a mega trend. You have to look at their cash flows, whether they are at the right point they are coming into the company, so that they don't have to leverage too much or borrow too much from the market. So these are some of the bottom-up parameters that one needs to check before just betting on a company on a mega trend.
Let's take a short break and post that. Let's understand how can you have exposure to these mega trends and how can you have them placed in your portfolio. Stay tuned. Welcome back. You're watching the Money Show, a special edition with Nimesh Chandan, where we are trying to understand the mega trends that he's picked up for our viewers today. And since we are talking about mega trends and how can one track them, Nimesh, one very basic question that every investor wants to know. What is the biggest risk that mega trends framework does not protect investors against?
So, a very interesting question again. Mega trends is based on the idea of growth style of investing. What you're trying to find out is the companies that will grow their profits faster and for longer term. And hence, you are making, as an equity investor, making wealth through investing in them. And several factors affect the movement of the stock price. However, many studies have shown that it is the profit growth that is the most dominant factor that leads to the movement of the stock price. If the profit is growing in a very steady manner for a longer term, stock prices follow. If the profits are not growing, even if the stock price, for example, right now because of certain valuation is higher, but it will come down and correct there. The two things that one has to look for when doing mega trends investing, or what are the risks that we see, is one is valuation. If the mega trend or the idea is well discovered by the market, you may not find them at the right valuation. And any company, any stock that you invest at very high valuation, your compounding reduces, or at worst, you may make a loss. So, one of the things to take care of is that you are taking care of the right valuation. The second part is when you are forecasting growth, you have to assume that while a company is benefiting from a mega trend, doesn't mean that it may not have cycles in between. Very few companies have a very linear type of growth. Many a times people make a mistake that if a company has grown 20% this year, it will continue to grow 20% linearly for the next 5 years. That doesn't happen. There will be some years when growth will be much better than 20%. There'll be years when you will see lower growth than 20%. So one, inherent cyclicality, and second, getting the valuation right. These are the two risks that you have to take care of when you're investing in megatrends.
Alright, okay, so this leads to my other question, which is again on long-term compounding. So, is there a danger that the language of long-term compounding can cause investors to hold on to declining businesses for too long? Or do you think it's because you just mentioned that there's going to be a cycle, one really needs to be patient and ride it out?
So again, very interesting. So many a times, because of a certain bias that people get anchored to the cost of what they have bought, or probably get anchored to a 52-week high or an all-time high of a stock price, that even if the business has changed and it is not benefiting from mega trends, or worst, it is at the opposite side of a mega trend, people keep holding on to it, thinking that once they get their cost price, or once it goes back to 52-week high or all-time high, they will sell it at that. I think that's a behavioral mistake that one needs to be careful of when you are investing based on mega trends. So I think it is very important to see to it and keep watch that your business is on the right track. Ultimately, if the profits keep growing, the stock prices will follow, and you will get good wealth creation from this strategy.
Can we say that these are going to be the fundamental reason to, sell the stock exposed to a mega trend?
Yeah, so a few things that one needs to consider for selling. Number one, don't sell a company purely because the valuation went a little higher. If you think it's a long-term story, a 5-10 year story, just because the valuation went a little higher than the fair value for some time, doesn't mean that you have to exit the stock. You have to keep monitoring that stock. If the valuation becomes too high, or what we say as a bull case scenario, when everything is got priced in, even for the next 5 years, you can look at selling the stock. But many a time, because the stocks are fluctuating wildly in bull markets as well as bear markets, doesn't mean that just because your fair value is 100, if it goes to 101, I'll sell out. You have to keep looking at longer term assessment of these businesses and get out only if it is very fair, highly valued. So you change your or exit your stocks only when there is a change in the business, there is a change in the management, valuations become, say, exorbitantly high. Four, it becomes a very large part of your portfolio. It becomes a very high concentration in your portfolio. And fifth, you find a fantastic replacement at a better price than what you are holding. These are the five major reasons that you can look at exiting or taking profits in a stock.
Are those inflection points that you recognize or identify before the market does?
Uh, Kavita, I can tell you, after years of investing, finding the right buy price is easier. Finding the right sell price is very, very difficult. Buy price is easier because you know below a certain intrinsic value or below a certain valuation, the company is trading at a very, very cheap valuation. it is very difficult to say that at what price the company is at extremely high valuation. It's a very difficult art, I think, to check that. I would suggest investors don't look for the exact top or the exact bottom in a particular company. If the company is attractive, you accumulate it slowly. If it has become exorbitantly high priced, apart from the five reasons I told you, you can do a more staggered selling in that. But also keep in mind, there could be some business positive that the crowd is looking at, which is why the stock has re-rated very substantially.
You know, there's an argument that indices can be backward looking, but isn't there also a danger that a mega trend investor becomes too confident about predicting the future in the process?
You are right. Megatrends has an advantage over the indices because an index, say a large index like a Nifty or a Sensex, take in companies after they have been winners for many years. They exit certain companies after they have been losers for many years. So indices are typically backward looking, the large ones that we use as a benchmark. Mega trends is forward looking. It is trying to predict the future. It's looking at adding future winners and avoiding future losers. It requires a good amount of research and effort to identify these winners. What one can do is diversify in terms of number of mega trends you're betting on, diversify in terms of number of companies that are benefiting from the mega trends. Keep a watch on these businesses, how they are doing, and that will give you much better hit rate or much better experience investing in mega trends. We publish a lot of data on which companies form part of which mega trend, and we publish it on a monthly basis in our fact sheet. Viewers can also have a look at that to help them guide them.
All right. I think with that, it's a wrap on this discussion also. Thank you so much, Nimesh, for taking your time out and explaining all of this to our viewers in the simplest way possible. Thank you so much. Thanks.
Pleasure being here. Thank you.
And with that, it's a wrap on this edition of The Money Show as well. But then you can reach out to us, send across your questions. The QR code will flash on the screen. Scan it and connect with us. Goodbye.